Hey, what's going on, everyone? This is Nigel over here, and in today's video, I have a very special guest. We have Janelle from United Mortgage Lenders. He's a lender who is a professional in the space around loans. So, if you're looking to buy a house for the first time, this is the guy that you want to talk to. So, I'm going to pass the mic over to Jamel. Jamel, you want to go ahead and introduce yourself to the people?
Yes, definitely, definitely. My name is Jamel Romans. I'm originally from Hollywood, Florida. I've been living in Brooklyn, New York for the past 6 years in Flatbush. I got into the mortgage industry because a year ago, I bought my first property in Canarsie, Brooklyn, multifamily home, a 4 unit. And I'm house hacking essentially, where I could decrease my monthly expenses overall. My overall experience got me into mortgage lending.
That's awesome. That's good to hear. It's
Mhm,
good to hear. I know a lot of people have a lot of questions about
mhm.
getting loans. It can definitely be overwhelming for a lot of people. So, we're just gonna talk about some of the big questions, the big concerns, the things
Yeah.
that create a lot of confusion for people. So, one big question that I know I get all the time from people are, what are the different types of loan options that are available to first-time home buyers?
Yeah, yeah, for sure. It's a lot of good options out there for people looking to buy a home. They can either go FHA. FHA, you could put 3.5% down, and FHA requirements are 580 credit score or above. If you have a credit score a little bit lower than that, it would be between 500 and 580, but that would be 10% down. With those type of loans, you want to have a good debt to income ratio so you could be able to approve for those. You also can go conventional route as a first time home buyer. If you wanted to go single family, you could put 3% down. And now, which is a huge game changer, if you wanted to buy a multifamily with conventional, you could put 5% down on a conventional property. And not in the past, FHA, you have to worry about a self-sufficiency test if you wanted a 3 to 4 unit with multifamily, and sometimes deals will fall through if that test didn't pass. And that test is the rental income of the property needs to be at the mortgage payment amount or above the mortgage payment amount. And now that conventional is allowing multifamily purchases with 5% down, that rule no longer applies. So a lot of deals can continue to go through out there. So there's many different options on the table. It just whichever works best for the buyer. With conventional is 620 credit score and above.
All right, that's awesome. That's good. That's good
Mhm.
stuff right there.
Mhm.
Very, very important for people to understand these different types of options out there.
Mhm.
Another big question that I get very often is, if I'm looking to buy a home for the first
Mhm.
time, how can I improve my chances of getting approved for a loan? How can
Yeah.
I improve my chances of doing that as a first time home buyer?
Yeah, definitely. To improve your chances, I would say to it depends on which loan route you choose. With FHA, it's the lower end of a credit score, but conventional is the higher end of a credit score. To make your chances higher, it's best to keep your debt lower than your income, and you'll be able to qualify for a higher amount of the loan amount, being that you have low debt to income ratio. Um, One thing I like to suggest to people is, go into this with like an investor mindset. If you have the opportunity to invest in like a multifamily home, you have an advantage to become an investor. So some things I like to teach people is like either a 4-3-2-1 strategy where you get your 4 unit first, then you get your 3 family, then 2 family, and save your dream home for last, because you can build a rental portfolio within like a 3-year time span and be able to create income for yourself. Because when you're buying a home, a lot of people want to get out of, I don't want to pay rent anymore.
All right.
But if you go jump into buying a single family, you're just paying the bank. This
Mm,
In reality, the house is not your house. It's the bank's house.
yeah.
So if you go multifamily route, at least you can live in one of the units. You can rent out the other units, and you'll be able to create rental income for yourself. And you can house hack, and you can live at an advantage, rent free, if you buy the right deal. So don't worry too much on the interest rate. If you're able to find the right deal for yourself, it will work out for you in the long run.
Yeah, absolutely. That makes great sense. I tell people
Mhm.
that all the time. If you're gonna buy a house, it definitely makes more sense to put yourself in a position where you can actually make some money
Hmm.
out of getting a house because
Hmm.
it's very expensive, you know.
Yeah,
Really, really good stuff there. And I love that house hacking. Definitely very, we were talking about that earlier.
yeah.
It's powerful stuff for
Yeah,
sure.
and as a house hacker, a person can qualify for a higher loan amount because the rental income is factored into the cost. So somebody with a lower salary might be going after a two or three or four family, whatever
Mhm.
those rents are, can get them a higher amount because they know that income is going to support them, assisting to help them know their monthly mortgage payments.
Love that. Love that. Very powerful knowledge right there for the people.
Mhm.
All right. So let's get into the next question I have. What are some of the most common mistakes that you find home buyers are making when applying for a mortgage? What are those big mistakes that people are making you see come up a lot?
I would say, as for first-time home buyers, everything is fresh and new, and they really don't know the steps to take and approach. So many times people go to the agent first, but it's best to come to your lender first. So if somebody comes to me, I can be able to get them pre-approved, so they know how much house they can afford and you know what they can expect. Buying a house is like not as simple as like going to the store and buying a pair of shoes or going to the dealership picking out a car. So if somebody comes to me, I can get them pre-approved. I know how their income is looking, how their savings is looking, and then I can come back to your agent, which will be Nigel, and I can present the numbers to Nigel, and then you could begin shopping with him around on the properties based off of your financial stability and what you can afford.
Yeah, yeah, absolutely. That's very true. It is so important to get pre-approved to the lender. That way, you know exactly what you're working with when you're
Hmm.
going through the house hunting process, and it gives you a huge leg up on other buyers. And you can
Yeah,
really just start moving a lot faster.
yeah, you can.
When you're making those offers and putting
Hmm.
yourself in a good position. So in your professional opinion,
Hmm.
interest rates. This is something that is the hot topic of discussion across social media, across everyone in the barbershop. What are the current trends with interest rates, and how do you think that these trends affect monthly payments for people?
Yeah. Yeah, to me, my mindset is I don't like to worry about the interest rate too much, because as long as a person is finding the right deal and it makes sense,
Mm-hmm.
they shouldn't have to worry about it. But right now within our company, our interest rates are in like the high fives and like the low sixes. And all
Mm-hmm.
of it takes into a factor of a person's credit score, their financial stability, and what type of property they're buying. But the monthly mortgage payments, a lot of things could go into a factor, like the property taxes amount could increase your monthly mortgage payments, or the homeowner's insurance that you choose. It just depends on numerous factors with the property that can affect your monthly mortgage payment.
Yeah, absolutely. Yeah, I definitely
Mhm.
agree with you. It's very, very, very powerful. And it's just good to have an understanding of just interest rates and what's going on, and that's what you're
Mhm.
here for, and that's what we're here for, is to help people be able to navigate these difficult waters.
Yeah.
Um, so
And the election year is also playing a huge factor as well, making the rates kind of rocky, and then the Fed's meeting. I know September, a lot of people are hopeful some rate cuts are going to happen, just
mhm.
because of like the inflation and unemployment rates. A lot of those play factors of the interest rates increasing or decreasing. So we're hoping for something good, but like I said, if it doesn't happen, as long as you're finding the right deal, the interest rate won't matter.
Yeah, I mean, what do you say to somebody? Because I talk to people all the time who are, they're just like, oh, I want interest rates to come down. That's when I'm gonna buy a house. What do you say to that person who's just saying they're
Yeah,
waiting for interest rates to drop all the way back down before they finally decide
yeah.
to get in their dream home?
Yeah, yeah. So it's when I usually say to somebody like it's like a teeter-totter game. If the rates are coming down, that means the sales prices of the homes are going up. So the longer you wait, you have a higher chance of having to spend more out of pocket because of the sale prices of the home are much higher. Equity of homes are only going to keep appreciating up. Um, so yeah, it doesn't matter what the time is, as long as that's why I kind of push multifamily investing or house hacking, because you can live in the property and you can create rental income for yourself and you kind of be ahead at an advantage.
Yeah,
Um, that's what I usually like to tell people because it, the houses could go up, the rates could go down, and it just, you never know. So you have to be able to choose the right deal.
yeah,
Mhm.
definitely, definitely very important to understand that. So,
Mhm.
Another question that I get all the time when I'm talking to
Mhm.
people every single day is, what are the additional costs that that someone who's interested in buying a home should be aware of when they're looking to apply for a mortgage? What are some additional costs people should know about?
Yeah, I would say like the step-by-step process, things that would come additional outside of like before you get to the closing table is for sure once you come to me, you get pre-approved and you start shopping with your agent, Nigel. The things that may come up once you get in contracts and you find that home you want is you want to be able to do a home inspection because you
Hmm.
want to make sure you're not inheriting a property that has a lot of issues. You want to have a home inspector come out, inspect the electrical, the plumbing, the roof, the sockets, the important things, the good bones, the good structure of the house because you don't want to inherit something bad. And I will say that may arise because you have to pay an inspector, and they can vary. Some could be as low as 500, some can get as close to 1,000. But I wouldn't necessarily pay for an inspector on all of the properties that you look at if you're out there shopping with an agent. I will narrow it down to like your top two or your top three because it could be very costly and I would just pay for it from there. Also, throughout that process of having a home inspection, if you find a house that might need some renovations, I would suggest that you hire a contractor to walk through at the same time the home inspection is happening, so you can kind of get an idea of what those renovation costs may be, so you know where you're going to move forward with those steps. And I always recommend people to try and find a contractor that will come and look and not charge you to give you a quote.
Mm,
Because you can find contractors that won't charge you anything just to look through the property to give you an estimate.
right.
And what else could come up front before closing? I would say you may have to pay for your homeowner's insurance up front. Because you want to shop around and figure out what homeowner insurance works best for your property and what's most affordable for you. So that's another thing I would say that will arise. And also paying for an appraisal for the property to figure out what the worth or what the value is of that property and see if you're buying a home that has equity built in it. And that can help you in the long run as well when it comes to closing, having the equity. You can kind of use a seller's concession. That's what you would negotiate with your agent, with Nigel, with the seller. And you may be able to use that concession towards your down payment or even maybe even buying down the interest rates. There's different options that you can go.
Yeah, yeah, definitely. Those are some really great points that you just made there.
Hmm.
It's definitely very important to get that home inspection done, to get that appraisal done,
Hmm.
because these are things that can ultimately cause a deal to basically just break down, and it's good to get ahead. So I think that's
Hmm.
some really, really solid advice that you're giving.
Hmm.
For sure. I'm sure you've seen that a lot where deals just break down because of, inspections
Yeah.
and stuff like that.
Yeah, yeah, you have to because the house may look completely different once you get to that final walkthrough day. So it's always best to have an inspector come through to make sure nothing is damaged or something that's going to be very costly to you after you close. So it's better to have a feeling where you can sleep at night because you had this house inspected. So it's very important to use a home inspector.
Yeah, yeah, definitely, for sure.
Mhm.
So those are just pretty much the main questions that I had today.
Mhm.
Um, you know, Tomorrow's another time we could
Yeah.
definitely get into some other topics, maybe some of that house hacking or something like that. But
Mhm.
before we end, how can people get into contact with you? If they're looking for an excellent lender to work with.
Yeah, yeah. You can find me on Instagram at Jamel Romans, JamelRomans, and you can reach out to me there, or you can reach out to me directly at my cell phone, 954-589-8495. And my company is United Mortgage Corp. and based in Woodbury, Long Island. We do loans in New York, New Jersey, and any state, as long as the deal makes sense for the buyer, we try and assist them the best way we can because we're in the business of helping people.
Yeah, yeah, absolutely. At the end of the day, that's what we do. And, the people always got to come first. We got to make sure they're
Mhm.
getting the best service, the best information. And, that's why we're here today.
Mhm.
So, yeah, Jamel, I appreciate you taking the time. I know you're very busy. I appreciate you taking the time to, hop on to this episode today and kind of drop some knowledge because, loans, lending, it's a very complicated topic and it's very, very important because it's where the money
Yeah,
comes from. Without any money,
yeah.
we ain't getting any houses out here. So,
Yeah. And buying a home is a big step. So I want to make sure people get there and having making the best decision for their future. So for sure.
Yeah, for sure. All right, Jamal. Well, I
Mhm.
really appreciate you taking the time, and I look forward to talking to you again soon.
Yes, thank you for interviewing me today, Nigel.